Hey guys, so in this video we will show you the exact candlestick patterns we use to identify trade opportunities. Make sure to click the subscribe button and hit the notifications bell so that you know exactly when new content is released. As we have a lot of new things coming, so stay tuned. A lot of you want more content on price action, and understanding candlesticks is a big part of price action. Also, right now, comment below on what next topics you want us to cover as we look at the comments to decide what videos to make. We really enjoy hearing from you guys. So, first, why are candlesticks important? Candlesticks tell a story and are a reflection of what buyers and sellers are doing. This means that candlestick patterns that forms tell you a lot about what is occurring in the specific period of time in terms of buying and selling within the market. Now there are many ways to use candlesticks, but in this video we will be focusing on combining the candlesticks with key levels. So let's go through the specific candlestick patterns we look for. The first candlestick pattern we look for is the long wick candle. A long wick candle looks like this, where the wick is sticking out, and a pro tip, the longer the wick, the better the candle. So how do we use this candle type? Again, back to what we have been discussing in our previous videos, we look left and notice that the price came up, hit and reversed drastically, giving us a good level of resistance. Now as price came back up to this level, we had no idea whether there would be a trade opportunity or not. What you do is you wait for the price action to form at these key levels before deciding what to do. Price action comes in many forms, but in this case what we got was this great long wick candle that rejects resistance, resulting in a bounce short. So what does the long wick candle tell us in terms of price action? The long wick shows the buyers tried to push the price higher but failed, causing the wick to stick out. If buyers were in complete control, then you would have a candle that looked like this form instead, with the big body showing momentum. These long wick candles can form as a result of profit taking at these levels as well as sellers stepping into the market. Now there are also false breakouts that occur, but we will discuss that in another video. So let's show this again. You look left and notice that both times price got at this level, it hit and reversed drastically, giving us a key level of support. Then as price came back down to this level, we were looking for some form of price action at this level. First we had momentum loss through shrinking candles with a big candle, a smaller candle, and then finally you had this green candle form that is a very long wick candle, which shows that the price tried to push lower but failed, which caused the very long wick candle close and then a bounce upwards. In conclusion, understanding candlestick patterns is crucial for identifying trade opportunities and understanding the actions of buyers and sellers in the market. In this video, we have shown you how to use long wick candles in combination with key levels to make informed trading decisions. Keep an eye out for our next video where we will cover more candlestick patterns and how to use them in your trading strategy. Thanks for watching, and don't forget to hit the subscribe button and turn on notifications for more valuable content.